everyone. We're going to go ahead and get started, and we'll have people come in as they come in. My name is Kama Burton. I am the chair of our Fair Housing and Diversity Committee. We started back in October, I believe. September was our first meeting. And so we're getting started with the year. So if you are not on the committee, you'll be receiving some information to join our committee. We meet once a month, normally the third Thursday of each month at 3 p.m. Is it 2:30? 2:30. And so I'm super excited to have this thing going. There's a lot of associations that are starting their diversity committees after everything that's been happening with George Floyd. I got muted. Uh-oh, sorry. I don't know what you heard or didn't hear. What's the last thing you heard? I don't want to repeat myself. Okay, I'll repeat.
George Floyd.
Okay, so you didn't miss much. So after George Floyd and the divided news day testing that was done last year, came out last year, and we realized that changes were needed in our industry. And so I'm going to give you guys just a little bit about who we are. So I'm going to read our mission statement. It says the IVAR, Fair Housing and Diversity Committee, serves as an advocate for fair housing practices and promotes equal opportunities in housing while further supporting diversification within the real estate industry to better serve association members and their communities. The committee aims to increase opportunities for our members to actively participate and provide education to support consumers and real estate professionals. And here are our committee goals that were agreed upon with our committee. Number one, our outreach to members from diverse constituencies to participate in the Fair Housing and Diversity Committee and association committees, task forces, and leadership activities. Next, develop specific programs and activities. For example, education and training programs, special events, what we're doing right now, that promote and foster the purpose of the Fair Housing and Diversity Committee. Create a Fair Housing and Diversity IVAR webpage that includes resources and information for members and the public, and coordinate and integrate with key stakeholders, stakeholder groups, Fair Housing Council, Realtist, et cetera, and the activities and missions of IVAR's Fair Housing and Diversity Committee. And lastly, have a positive impact on fair housing and diversity issues related to the Inland Empire housing landscape through education, exposure, and strategies. So that's who we are. Those are committee goals. Everyone is welcome to be a part. I want to introduce our co-chair, who we just brought in, Mary Brown Edwards with Keller Williams. Say hello, Mary.
Good morning and Happy New Year, everybody. I'm happy and excited to see all your faces again. I missed everyone. Thank you.
And Mary is working on some things. Keller Williams they have this leadership council through their company on diversity, or diversity council in her company that they're working on. And she's also on the board of directors here at IVAR. So thank you so much, Mary. So at this time, I'm super excited because again, through education, through knowledge, this is where we can best serve our communities. So I heard Mark Alston, who is going to be our speaker today. I heard him on a Realtist call. He was a part of the National Association of Real Estate Brokers, and he was so powerful in his speech. I love his passion. I love the fact that he's just to the point. He doesn't sugarcoat it so everybody can feel good about he tells the truth. The numbers don't lie. You're going to absolutely love him. I'm going to read his bio and he's going to take it over. So Mark Edward Alston, owner of Alston and Associates Mortgage Company. Mark has served as first vice president of the California Association of Real Estate Brokers, president of the Consolidated Board of Realtists of Los Angeles, chairman of the Public Affairs, politician, where am I at? Sorry, you guys. Political action and mortgage banking committees for the National Association of Real Estate Brokers. Mark has been in the real estate profession since 1989. Mark is a highly regarded public speaker and public policy strategist in the area of housing finance opportunity. So let's welcome Mark Alston.
Good morning, and thank you so very much. I'm glad that you're excited. I guess I want to start by saying that, in being true to who I am, that this morning I have a heavy heart and a concern for what's happening in our nation, not from one side or the other. I'm concerned about censorship of anybody. If anybody's censored, I'm worried about being censored. I'm concerned about divisiveness and division. We're one race, a human race. I believe in this country. I'm an American. I'm a Black American. And today I'm going to speak from a Black perspective, not multicultural, not to talk about Asian or Hispanic or white issues, but to speak from a Black perspective as a Black American. And I guess that's what I want to say. I've had the opportunity to testify in Congress. I've had the opportunity to present white papers to Congress and to speak around the country. And I actually got a call when this call started from one of Kamala Harris's senior advisors. And I can't believe I told her I'll call her back. The opportunity to weigh in at a high level is beyond anything that I would ever have imagined that Mark Alston would be doing. So without further ado, I'm going to see if I can share my screen here and get us to where I want to be. You can see my screen, correct? Okay, good. The State of Housing in Black America is a report that is been presented nationally since 2013. It's commissioned by the National Association of Real Estate Brokers. We usually bring it out at the National Black Caucus. I've had the opportunity to speak at the National Black Caucus for the last 7 years. It's a comprehensive report. When we started looking at data, we used to always look at others' data and present others' data. Now our report is comprehensive in that others are now going to our report to present data and the status or the state of housing in Black America. I am a member of the National Association of Real Estate Brokers. I'm also a NAR member, and I sit on the NAR Fair Housing Committee. I've been a member of NARAB since 1989. My first day in real estate, I walked into a local board meeting, and it was a meeting of people who looked like me, who had similar concerns that I did, and I felt their advocacy positions, and so I've been a member and an active member for the last over 30 years. I want to talk about the state of housing in Black California with a focus on the Inland Empire today. The resources I use are the home mortgage disclosure data that are required by the banks by lending institutions, not just the banks, to be reported every year to the Treasury. We're using the most recent data. This is the January 2021. We will have 2020 data soon. The most recent data is 2019. I also use the US Census. Third quarter came out October 27th, 2020. In the United States, last year, there were 9,325,241 mortgages completed of all types: conventional, conforming, jumbo, seconds, all types. In that, whites received 6,012,506, Hispanics 890,260, Blacks 516,405, Asians 499,980. The Black approval rate is 48.53%. You know, anytime the approval rate is less than 50% in a community, it affects the collective consciousness of that community. People want to feel successful, and when more than half of your community is being denied, then they don't want to go and apply. They don't apply based on their percentages. They go buy a car or something else, a depreciating asset, in order to feel successful, as opposed to they buy a depreciating asset as opposed to an appreciating asset. And so we see car sales as opposed to home sales in our community. The denial rate for Black applicants is 27.04% nationwide. The white applicant denial rate is 15.16%. In 2018, the previous year, there were 7,720,655 mortgages, white 5,091,185, Hispanic 726,140, Blacks 430,819, and Asians 399,740. The Black approval rate was less, 45.71%. The Black denial rate was 31.14%. The white denial was 17.87%. Between the 2 years, there were 1,604,246 more mortgages done in 2019, in the most recent year, than in the year prior. 85,586 additional Black mortgages than the year before. The Black borrower approval rate improved from 45.71% nationally to 48.53%, and the Black borrower denial rate improved from 31.14% to 27.04%. In California, we have a majority minority population. Hispanics are with 39,512,223 total population. Hispanics represent 39.4%, whites 36.5%, Asians 15.5%, and Blacks 6.5%. The Black population of California is in decline. We are leaving for other areas in general across the state. Total mortgages in California last HMDA data year, 1,133,072. Whites received 499,408 mortgages. Hispanics, as the major majority, as the leading ethnicity in our state, received less than half that, 209,606. Asians, 164,829, and Blacks, 38,499 new mortgages in the entire state. Blacks are 6.5% of the population, but only received 3.4% of the new mortgages. The Black approval rate is 53.64%, above the national average. Black would-be borrowers submitted 75,990 applications to receive 38,499 mortgages. That's a lot of deals that fell out of escrow. In California the year before, total mortgages 841,366, whites 377,748, Hispanics 158,435, Asians 122,811, Blacks 29,815. The Black approval rate was 49.33%. The Black denial rate was 25.16%. In California, the total number of mortgages were up 291,706 over the previous year. Black originations increased 8,634. The Black approval rate increased from 49.33% to 53.64%. The Black borrower denial rate improved from 25.16% to 20.25%. Now, getting close to home in Riverside County, the total population of Riverside County, this is as of July 1st, 2019. 2,470,546. Hispanics represent 50% of the population of Riverside, whites 34%, blacks 7.3, and Asians 7.2. And there were 86,455 new mortgages. Whites 37,081, Hispanics 24,204, Asians 5,422, and blacks 4,368. The black approval rate is 53.92%. The black denial rate is 18.97. White is 14.78. It took 8,542 black borrower applications to originate 4,368 new loans. Blacks are 7.3% of the population, but only received 5.1% of the new mortgages. Previous year, there were 63,634 total mortgages done in Riverside County. Whites, 28,478, Hispanics, 17,773, Asians, 4,221, and blacks, 3,245. Black approval rate in 2018 was 49.35%. Black denial rate was 24.27%, white 19.24%, blacks again are 7.3% of the population, but only received 5.1% of the new mortgages. There's an interesting data piece that came up while I was looking at this, both in Riverside and San Bernardino County, both in 2019 and 2018, the black population received in each one of those years, in each one of those counties, exactly 5.1% of the new mortgages. I thought that was interesting. You don't usually see a coincidence of that nature. There were 7,008 black applications to originate 3,245 new mortgages. Now in Riverside, there were 22,822 more loans originated. That gave an additional 1,123 additional black mortgages. The black approval rate improved from 49.35% to 53.92%. The black denial rate got better from 24.27% to 18.97%. The one thing, San Bernardino County. Total population for San Bernardino County, 2,180,085. Hispanics are 54.5%, whites 27.3%, blacks 9.4%, Asians 8%. Total mortgages, most recent year, 63,768. Hispanics, 22,350. Whites, 21,531. Asians, 6,028. And blacks, 3,261. The black approval rate is 52.47%. Black denial rate is 20.4%. White denial is 14.92%. Blacks are 9.4% of the population of San Bernardino County, but received 5.1% of the new mortgages. You know, it's interesting because with the prices in San Bernardino and Riverside County, but more San Bernardino County, we're seeing an influx of black business in the real estate business, of black home buyers moving to a more affordable area. The previous year for San Bernardino County, 49,669 mortgages. White, 17,219, Hispanics, 17,118, Asians, 5,335, blacks, 2,522 new mortgages. Black approval rate was 48.72%. Black denial rate, 24.75%, compared to white denial at 19.17. 5,600 black applications to originate 2,522 black mortgages. That's a lot of denials again. There were 14,099 more mortgages originated. Black approval rate increased. It got better from 48.72 to 52.47%. The black denial rate, it got better too, from 24.75 to 20.4%. And there were 739 additional black mortgages. Over the 2 years, there were 1,129 new Black mortgages originated in last year between the two counties than there were the year before. So our business actually, if in the Black home buying community in San Bernardino and Riverside County last year, it got better. No question, business got better. My business is better. I suspect if you talk to most of the agents around, their business got better. But the other thing that needs to be remembered is that better is relative. Nationally, the Black home ownership percentage is 46.4%. In California, that number is actually 34%. Our home ownership percentage is 46.4% compared to white home ownership at 75.8%. The gap between the two is 29.4%. In 1900, the home ownership gap between Black and white households was 27.6%. It's 29.4% today. It's worse today than it was when it was legal to discriminate. My contention is that this gap that's always been around 30% is intentional. It's true, our business got better, my business got better. It's true, but business got better across the board. Business got better for all ethnicities. There's more business across the board, and it's true, a rising tide raises all ships. But what's also true is a good head start beats fast running. If I give you enough of a head start, no matter how fast I am, I can't catch you. What's a head start? 246 years from 1619 to 1865 of slavery, 103 years from 1865 to 1968 of legalized discrimination, segregation, Jim Crow. And then we've had the last 52 years from 1968 to this year of what has been a fair housing and equal opportunity era. Equal opportunity, fair housing in 1968, after the assassination of Martin Luther King on April the 4th, they signed a bill that was failing into law to provide equal opportunity for housing, but the numbers and the gap have remained the same. If I give you 249 years of a head start, and now you make everything equal, what's fair about fair housing? If it's equal housing now, then that means we're going to equally stay behind. Public policy and tradition have served to block access and severely restrict Black home ownership opportunity. What do I mean? We've had law, policy in this country from federal, state, county, and municipalities that have restricted and denied Black home ownership opportunity, exclusionary zoning. Outlawed in 1917 on a Supreme Court case with Woodley versus Buchanan in Louisville, Kentucky. What that meant was, and they were all over the country, is that we zoned the cities to not allow Blacks to live where whites live. So whites lived in good areas and Blacks lived in bad areas, usually where there was industrial work or poor drainage, just bad areas. And they were zoned that way by city law, and it set the groundwork, the landscape for the ghettos and the disparate areas that we have today. When that became illegal, then developers, landowners and developers started going into what were called private covenants. You see them throughout California. Where I sit today in my office, there's a private covenant on title. You don't see it published when they print your report, but it runs with the title that says that this property could not be sold to Black Americans, and that they were only allowed in the area as handymen or domestic workers, and had to be gone by 6 unless they were living in that property. Those became illegal in 1947, 1948 with the Shelley versus Kramer lawsuit, Supreme Court judgment. Next, we had U.S. government redlining. What do I mean by that? You've all seen the redlining maps. FHA, which we tend to think was designed for Black people, was actually designed to move inner city white people out of public housing projects into new housing in the suburbs. Blacks were not, they weren't allowed to buy. It was written into the to the manuals, to the underwriting manuals. It was written into the appraisals. It's called redlining because they commissioned the Homeowners Loan Corporation to go out and map the cities. They developed maps that had red, yellow, green, blue, and green areas. The green areas were the new subdivisions. Blue were the traditionally white areas. Both of those were eligible for 85% loan to value loans. The yellow area was next to black areas next to red areas where Blacks lived. Yellow was either mixed areas or industrial areas, and they could get a 15% loan to value loan. So they had to put 85% down. And the areas that Blacks lived in, red, got no access or very little access. Then we had predatory housing contracts. Because there was no financing available, then Blacks started buying from private owners using housing contracts. We used to do them. I bought my first house with a private contract, an all-inclusive trust deed, where I gave the seller, we used to call them a wraparound mortgage, where I gave the seller $58,000 in cash and took over her existing mortgage. Well, that happened, but we recorded mine. That happened, and it's famous in Chicago, where they weren't recorded until the deal was done, until the property was paid. The properties generally sold for 22% more than the value of the property. And if the people defaulted or weren't able to make their payments at any time, they were evicted like renters and the properties resold. They say $4 billion worth of Black wealth was lost just in Chicago with private contracts. Then, of course, we have eminent domain. How does eminent domain play a part? The freeways, the Century Housing project, the 105 freeway through Los Angeles, where it ran through a Black neighborhood and displaced Black housing. All through the country, we have eminent domain where the government comes in, usually in urban areas, and displaces or finds a reason why this single family housing needs to go for the public benefit, and Black folks are removed. And then we have today racially disparate housing finance policies, what I think are the new Jim Crow, racially disparate housing finance policies. In order to talk about that, I want to show the disparities. On average, Blacks make across the country $60.01 for every $100 a white family makes. This is the income in general. Asians are our highest earning ethnicity at $91,404 a year. Whites at $70,727. Hispanics, this is household income, at $51,747, and Blacks at $43,966. Now that transposes into wealth. White families typically, generally, as of 2019, have $147,000 in wealth, as compared to the Black families, $3,600 in wealth. And this is one of my favorite charts. Blacks generally have 5.5 cents for every dollar that white families have. And if we're not careful, it's predicted that the median Black household wealth in 2053 will be zero. If we continue to buy depreciating assets and not buy appreciating assets, not paying attention to the foundation of wealth, which is home ownership, this is where our wealth is predicted to be. Average credit scores, when you make less, you don't pay as well. You want to pay, but the capacity is not there. Asians are the highest earning ethnicity in our country, and their average FICO score is 745. Whites second. This corresponds directly with income and wealth. Whites second at 734. Hispanics average FICO score at 701, and blacks average FICO score at 677. Freddie Mac actually has, in their study, based on what they see, the average black FICO score at 626. So when you design a housing finance system that charges cost and interest rates based on down payment and FICO score, you've designed a racially disparate system, whether it was intended to be or not. Loan level price adjustments. What's that? In 2008, in the midst of our recession, Fannie and Freddie were in trouble. If you got approved in 2007, early 2008 for a Fannie Mae Freddie Mac loan, you had access to the exact same charges and the exact same rates, no matter what your FICO score approval criteria. If you met the threshold, everything then became equal, as was their mission statement. In April 2008, they instituted some risk-based pricing in the form of loan level price adjustment, what I call the poor pay more fee adjustment. And what that did was price your loan added to the cost for lesser down payment and lower FICO scores, property type, and loan type. Now, at the time, this, I actually testified in Congress with regard to loan level price adjustments. At the time, Fannie and Freddie were in trouble. The American taxpayer loaned them year to date about $191 billion. Fannie and Freddie has since paid back $291 billion. $100 billion, over $100 billion, what they borrowed. They've been profitable for a good while now, and that money, the additional money, goes to the U.S. government, general treasury. Not a dime goes to housing. My contention, my advocacy position is it's time to end these loan level price adjustments because Fannie and Freddie are back to being solvent. This is the Fannie Freddie chart. This is the current chart for how they price your loan. The yellow is a white borrower with the average FICO score of 734. The green is a black borrower with the average FICO score of 677. 5% down to the far right, you can see that borrower we add 0.5% to that person's cost reflected in interest rate. The black borrower, 677 FICO score, you add 2.25% to their cost. That's reflected in interest rate. What that does is raise the cost of maintaining that house. On a $500,000 house for that 734 white borrower, 25% down, 5%, 475 loan amount, 2.75, approximately today's interest rate. The payments, 1939.14, principal and interest payment. Same house scenario, 500,000 sale price, 5% down, 475 loan amount. We're going to charge an additional point to cover that 2.25%. If you're putting 5% down on 500,000, 2.25% is $12,250. You don't have that additional money, so they raise the interest rate and use the yield to cover that cost so that you can get in. The difference in payment is $260.65 a month, or $93,834 over the life of this loan. A lot of people are calling this a black tax. After that was working so well, and because we have this private-public partnership with Wall Street to try to take the risk away from the taxpayer, they've also added loan level price adjustments to PMI, private mortgage insurance. When you put down less than 20%, you have to have some sort of insuring agency insure your loan so the lender doesn't lose. So they've added this same FICO criteria that the result of disparities in payment in income and wealth to PMI. So if you have a 734 FICO score, your cost is 1%. If you have a 677, your cost is if you have a 734 FICO score, your cost is 0.5%. If you have a 677 FICO score, your cost is 1%, resulting in, for the white borrower or the 734 borrower, $197.91 in PMI. For the black borrower or the 677 borrower, $395.83. If you keep that loan for if you keep that loan with the PMI for 8 years before you can get into a loan that doesn't have it or have 20% equity, that's another $19,000.32. What do these statistics tell us? What am I saying here in terms of this positioning is that today's housing realities, our disparate housing pricing policies are the reflection of yesterday's unfair housing policies. On November 19th, 2020, the National Association of Realtors president, Charlie Oppler, issued a formal apology for the association's past policies that contributed to segregation and racial inequality in America. Now, I don't know if you know, but NAR has stood historically on the opposite side of every piece of legislation or public policy move that would provide equality in housing and finance historically, be it fair housing, which started with the Rumford Act in California, or Proposition, I think it was 14, that they sponsored to try to make segregation the law in California. That's the history of our association. He also said we can't go back and fix the mistakes of the past, but we can look the problem squarely in the eye. What Realtors did was shameful, and we are sorry. I disagree with this. I think we can go back and fix the mistakes of the past. I think we can address what we lobby for and our positioning and become less selfish and self-serving and promote things that will help other people that may cost us a little bit more. It's time that we understand that we have to be advocates for risk. If we're going to increase opportunity, then we've got to return to the reasons that FHA was started, which was to provide mortgage liquidity to low to moderate income Americans. That Fannie Mae was started, and it's in their mission statement to provide mortgage opportunity to the very low, and low to moderate income Americans, even if it didn't provide a normal market profit by providing lower interest rate products or products designed to increase home ownership for those who may not have the same opportunity. We've got to get out of this not being an advocate for risk. We've got to, in order to increase home ownership in the Black community, we've got to give people a chance. I think it's more racist to build a barrier to home ownership than it is to build a bridge. When they put in the Dodd-Frank regulations, it built barriers, and Black home ownership went down. Every single year it declined. The high for Black home ownership was 2004, not 2005, 6, or 7 when they had that bubble, but 2004 at 49.1%. That was the high, in decline every year until 2017, when we started to go up just a little bit based on some deregulation. We have to be advocates for risk if we're going to increase Black home ownership. One of the things that we have to be careful of is not taking on other people's ideas and advocate for that which is important to us. I'm gonna stay right there. We can't take public policy for granted. We have to vote. You see the importance of participating, but listen to me. You don't just have to vote nationally or statewide. You need to go to your city council meetings. You need to go to your school board meetings. You need to go to your whatever meetings you have that are local, because that's where you have the most impact. You have to take control and vote what your interest is. Vote your house, vote your business, vote what you see. I've learned to believe what I see and read for myself, The opinion of a newscaster, a commentator, or something like that is not my opinion. My opinion is based on my own research. It's time to let the soap operas down, let the soap operas go, and do some other research. We got all of this available information at our fingertips on the internet now. It's no reason not to know. I don't know should not be a professional position from a professional real estate position person when it comes to housing finance and housing finance law. We have to advocate for positive, affirmative, assertive programs and initiatives designed to increase Black home ownership. You got to quit being ashamed to say, I need some help. Got to quit saying things like, I'm as good as anybody else. You are, but they still had a 249-year head start. You can be better. You still can't catch up. We need assertive, affirmative initiatives designed to increase Black home ownership. One of the things that I advocate the most is for down payment assistance programs. We have them, Cal Haffa, we have Chenoa, but nobody knows about them, and they're cumbersome. We need a federally funded, if we can do a $2 trillion COVID rescue relief program, how about we do a $2 billion federally funded housing down payment assistance program that's managed by the counties that those people live in. Maintenance of status quo is the overwhelming social construct. How it has been is how it always will be. Why is the gap always been 30%? We got to make some changes. We can't keep doing the same thing, expecting different results. And then, you know, on Monday, my office is going to be closed to celebrate this hero's legacy. And one of the things that he said is our lives begin to end the day we become silent about things that matter. Man, I refuse to be quiet. I refuse not to speak my truth to make you like me or to be accepted. I don't know how you plan to fight for Black home ownership, but this is how I fight. Thank you.
Wow. Thank you. Thank you. I'm a firm believer that I said it before, numbers don't lie. With everything that's happening in our world today, because now things are in your face, I think it's so important that we take this information and we do something with it. It's one thing to hear it and just say, oh, that was a great presentation or whatever the mindset is, but what are we going to do with it? Which is why we have our Fair Housing and Diversity Committee. And we originally started off with just calling it the Diversity Committee. And then I talked to Mark and he said, you know what, we need to make sure we have this because it needs to be fair. So what we're doing, just FYI, if you have questions, I will call on you or you can put it in the chat. You can raise your hand, we'll unmute you or you can unmute yourself in this. So I have a question for you, Mark. So my question is this, we have fair housing, right? Equal housing, but do you find that, well, clearly you don't, but what are some things that we could do so that it could, or other things we can do for it to be equitable as well? Because it's one thing to be equal, but it's another thing for it to be equitable. So I know you mentioned about some down payment assistance programs, but what are your thoughts or maybe anything else you may see for it to be equitable?
No, again, equitable is a relative term. Okay. You know, if you have $1 million and I have 1,000 and I give you both of you $100, it's equitable, but your $1 million, it's a very low percentage, has very low meaning. Whereas that person with $1,000, it was a healthy benefit. We've got to, you know how they used to take a test in school and they would grade on a curve? Mm-hmm. We've got to make equitable, we've got to put a curve on equitable. We got to put a curve on equity. If we're going to have any equality, there's so many things that have to be done. I'm in housing, so I talk about housing. But we need, you know, we need equal pay. We need equal opportunities. And in order to get there, there's going to have to be some, I call it assertive affirmative stuff. There's going to have to be some stuff that's designated. You know, Biden came yesterday. He said he was going to, in the second round of paycheck protection loans, designated towards small businesses and focus on Blacks and Hispanics. And from a majority race perspective, that was racist. And I understand the perspective. I understand the perspective, but it was racist when it was the other way. It was racially targeted when it was the other way. You know, when I read old law and policy, Blacks were denied housing opportunities specifically to eliminate the threat of what was called Negro intrusion into neighborhoods, specifically targeted. So in order to change that, you've got to specifically target those who you targeted before to provide some healing. So the concept of equality is truly one that after all of this time, to make it even just doesn't provide equality. We got to do something we got to get a jack and jack up one side, because one side of the house is lean and we got to get it level. So we need a jack on one side and the other side is okay. And I don't know if that answers your question, but I argue this a lot. I discuss it. Lisa Rice, the president of the Fair Housing Alliance, we have this conversation. Ilana McCargo from the Urban Institute, we argue this because we have this conversation. I don't claim to be diverse. I do know that I speak from a exclusive position with regard to Black people. But I do know that if I can help to solve the problem that affects the least of us, that all of us benefit.
That was pretty powerful. I'm gonna, Mary had a couple of questions in here. So Mary, I don't know if you want me to read them. There was one you had in regards to the disparity in appraisals, or did you want to unmute? Did you want to read it, or you want to ask your question?
No, that's fine. You did it perfectly. Just question, were there any percentages, or are you aware of any percentages of disparity as far as home appraisals? Because I've seen a lot of information about that floating around too, and just wanted to see from your perspective what you thought of it, Ms. Alston.
So, good question. History is home valuation code of conduct. The state of New York was sued along with American Savings by a guy who bought a house and they didn't do a proper appraisal, and they adopted this HVCC guideline rules, which then Fannie and Freddie adopted. Then HERA, the Housing and Economic Recovery Act of 2008, was passed that eliminated appraiser interaction with people involved in the transaction, the real estate agents and/or lenders, which then established appraisal management companies who then reduced the revenue that appraisers, our local neighborhood appraisers, were making. And so they all quit. And now our appraisers are all new young people from other neighborhoods who come into your neighborhood and they're scared to be there to begin with, so they don't assign it any value getting there. So in an escalating market, we get low appraisals. That FHFA currently has a request for comment out. And that's one of the areas of concern that they've addressed is low appraisals and varying appraisals based on neighborhoods. So yes, how in the heck am I getting a low appraisal when every other house around me sold for more? My appraisal's coming in low, and my appraiser has no idea what my neighborhood is and don't want to come back. You know, I had an appraisal the other day. The appraiser, he put the house had not been rehabbed, that there was chipped and peeling paint, the house had all new windows, had just been painted. He ain't go to that house. I don't know what that's about. And then I had to argue with the AMC, who would not change it. And then the appraisals are not portable. They don't move from lender to lender, and they were supposed to be, and the cost of appraisals went up. You know, so yeah, we have an appraisal problem. That's one of the areas, you know, I can't talk about everything in every presentation, but that's one of the areas where there's a large disparity and inequity with regard to value is in appraisals. Yes, ma'am.
You know what? They're just for those that don't know, especially very common in the Black community. A lot of times we take down pictures and anything
Oh,
Afrocentric that has to do with being Black, because we want to make sure we get a fair appraisal. There's people that have actually, when you buy pictures and it already comes with the family, and 99.9% of the time they're white families, they'll put things up like that just so that they can ensure that they get a fair appraisal, and it shouldn't be that way. So I've heard people talk about it. I've heard people complain and say there's really not a problem, but it's one of those, until you walk a day in my shoes, you would never know. So it happens. There's an article out there where a Hispanic family had to get a brand new appraisal. They were doing a refinance, I believe it was, and they had to get a new appraisal. Their appraisal came in $100,000 less than everybody, the others in the neighborhood. And they had a second one come out, and it ended up appraising, but they had to take everything down in order for them to get it appraised. I mean, I got another appraisal story. A friend of mine, it was a Hispanic family. The appraiser called ICE on the family. This just happened 2 years ago, called ICE. And they came knocking at their door, and this particular appraiser is on the blacklist. I've been blacklisted, and they're working this thing out right now. But these things are real. Like, this doesn't, it's not made up. It's not on Netflix just for you to watch. This is the real deal. So it's real out there. We have
an article, if I can.
Sure.
There was a mixed race couple refinancing. The appraisal came in low. Black wife, white husband. And so they ordered another appraisal. They took the pictures down, and the wife took the kids and left while the appraiser came, and it came in $130,000 higher. But I do want to say this to you. The reality is the reality, and denying the reality doesn't get us anywhere. We got to find a way to fight the reality. Denying that this isn't how it goes. Black neighborhoods have less value in every city across the country than white neighborhoods, and similarly situated white neighborhoods. That's the reality that we deal with. And we've got to start facing some truths in our reality and figure out what to do. We need to lobby to get back to having neighborhood appraisers from the neighborhood. We've got to recruit and promote people going into the appraisal field, and then support them when they do. Why don't we have Black AMCs? Why is every AMC appraisal management company I use generally like in Detroit or somewhere else? Why don't we have any Black or Hispanic AMCs that we can garner from that have contracts with the major servicers? That's the place to fix this problem.
I see Vicky has a question. Marcia had a couple of questions beforehand, so I'll go in order. Mary is asking, what tools are being used to identify borrowers?
I don't quite understand that question.
Meaning, how do they know it's a Black borrower versus an Asian borrower?
When the appraiser gets there?
No, I'm sorry. This is, I missed the whole point, right? This was in regards to the data that you have that you gave.
Flip from appraisal.
I'm sorry.
So let me say, so I
think
I understand.
And for the loans, I'm sorry.
So let me share this with you. I had CAR leadership call me, and they passed a resolution that they wanted me to represent to the National Committee at NAR to eliminate the disclosure of race and ethnicity on the 1003 and have the borrowers self-report to a separate organization. I totally was against that, 100%. If we don't do it, it won't get done. I don't believe, I'm gonna say this may sound contradictory. I've never had a loan turned down because my borrower was Black. I don't believe in de facto discrimination today. I believe in de jure discrimination, that we have systemic discrimination built into the system, like low appraisals, like low income, like less down payment, that affects and impacts this community because it sits in that bunch. It sits in that group more. I don't believe that my borrowers are discriminated against individually. If a borrower has an acceptable FICO score, acceptable debt to income ratio, acceptable credit, and the money, then they get approved. It's not rocket science. The problem is that too many of our borrowers don't have all of that, and we walk on the cusp. I don't understand the denial rates that we have. I can tell you that the two major servicers in California, both of their Black approval rates are below, are like 30%. 70% of the Black borrowers that walk into their companies are turned down or either walk away. How is that? I haven't had a borrower turned down in 2 years. I pre-qualify them, we do them, they get done. Why is there so much denial? Is it because we don't have Black loan officers because they raised the criteria? So we don't have loan officers that look, and Hispanic, that look like the people in the neighborhoods they serve. So there's a lack of care in how they put the package together, or a lack of follow through, or they offer them rates that they don't want in order to make a higher income. I've asked this question. So I don't think we have de facto discrimination. I think we have de jure discrimination. I don't think it's one. I think if your borrower is qualified and they meet the criteria, they get approved. But I think as a group, if you look at our numbers, when one group has 499,000 loans, one has 28,000. Why is our pot? Why is there no fish in our pond?
That was good. And I agree with you with that, the CAR. When we talked about that, that was my concern is does that change anything if we were to separate the two? So I'm with you on that one. Okay, next question from Marcia Frater. Do you think the reduction in the FHA MIP would help the minority community? That's the first question.
So I testified with regard to the proposed FHA changes, raising them and given the ability to raise the MIP and to raise the MMI, the monthly payment. And I stood in opposition to allowing the HUD to be able to raise or lower it without going to Congress. They promised that they would raise it and lower it based on conditions. At that time, FHA is required to maintain a 2% reserve of all of its mortgages, the reserve fund. I can't think of the name of it. At that time, it was at 1.47 or something. It was below, so they raised the cost in order to get the reserve fund solvent again. The last thing we wanted, like a friend of mine used to say, I don't care how much gas is, as long as they keep selling it. The last thing we wanted was to have FHA become insolvent. Well, the reserve fund exceeds 2%, but they haven't reduced the MIP or the MMI. The MIP is 1.75% of the loan amount and finance generally. And then the MMI is 0.8 or 0.85% of the loan amount, and they made it for the life of the loan. It should go back to 1.25% for MIP and 0.5% for the MMI, since we have a solvent reserve fund. And yes, that would help to increase home ownership in all communities, in the Black community especially, and help us move forward in terms of reaching our goal of Black home ownership.
And can you, just for those that, like, I'm familiar with the MIP, which is mortgage insurance premium, but I'm not familiar with the term MMI. Can you tell me what that stands for, or tell us?
Yeah, I can. It's upfront mortgage insurance premium. That's what it's called. It's like an initiation fee. It's whatever your sales price minus the down payment of 3.5%, then you add 1.75% is the upfront cost of getting into the FHA program. And then MMI, the monthly mortgage insurance, is just like PMI, it's just government. And it's set at 0.8 or 0.85%, depending on your loan to value and or your FICO score. It's higher than PMI at that same loan to value. And again, so it's you pay on, I can't think in my head what would it be, but you pay quite a bit on a $500,000 loan. That's $7,000 or so for the MIP to get into FHA. So if you put 3.5% down, you add the 7,000 back and finance that, and then you pay 0.85% of that every month, being an FHA loan.
Okay. All right. And then the next question, and you're going to have to give me these. Marcia also was asking, do you think moving the HMDA questionnaire to the closing phase would help with increasing the approval rate for minorities. So just explain to us what HMDA is as well.
Home mortgage disclosure data, which was passed, I think, in the Safety and Soundness Act of 1992, requiring all banks to report their production by ethnicity and gender. What she's saying is, do I think if we didn't disclose that they were Black before it was underwritten, would we get a better result? When I was a new loan officer, I went through a period where I started putting people were white on all my applications. That was doing a disservice. First, it didn't improve my approval percentage. But what it did do was eliminate the opportunity to track performance. No, I think it's important that we continue. I believe in people, and I believe people will do the right thing. In general, I think it's a few bad actors and some bad policies. So no, I think we need to continue to document the race and ethnicity and gender of people at the application stage. In case you didn't know, if your borrower checks, I don't want to furnish this information, I still have to put it in. I can't close the loan until it's in. It's something that must be disclosed so that they can track it. And it's the data that's the data that I use to tell you how it went. Without that, how I know? Do you think, I'm just not going to say this lender's name, wants me to know that they only approve 29% of Black loans? And when I talk to them and tell them they can't deny it because I got their number from what they reported, they don't want that. So no, we need to leave that like it is.
Awesome. Vicky, did you want to verbally ask, or you want me to read?
You can read it. I know this has been going on for a while, and I've always wondered what is it that we can do? And very often we can't do anything within the transaction. Mark just illustrated that with his scenario. So what is it? What recourse do we have even after the transaction where we know that there's this disparity in the value?
What recourse to what specific? Oh, disparities in the value. I'm going to tell you, that's a hard problem because we don't win rebuttals. The appraiser just says no. They just refuse. They just say no. And because that appraisal management company is in between you and them, there's no economic damage done to the appraiser's ability to do business. Very rarely do we get a rebuttal. We usually have to order a new appraisal from a different appraiser and respend the money at $400, $500, $600 for a new appraisal. When it's better.
But Mark, my question is, okay, the transaction, we can't do anything with that transaction. But after the fact, isn't there a reporting agency or a place you can go to make a complaint against that particular appraisal with your rebuttal, just so that it's on record for future appraisal?
Well, I don't. The CFPB would be the place to report. Again, we have an insulation with the AMC. You may have John Smith appraiser and 123 AMC. So your first complaint is with the AMC, and then the CFPB, the Consumer Financial Protection Bureau, would be the place to have that complaint, I would think, to be lodged. No other place. I don't think there's any other really agency that oversees them.
All right. Oh, sorry. Okay, so just the last two questions because it's time for us to wrap up. Do you think the 1% of the balance of student loans as a liability is affecting minority home ownership for FHA transactions?
Oh, for FHA, how about we just be inclusive and let's talk about all transactions. So absolutely. Absolutely. So if you didn't know, if you have a borrower with significant student loans, you want to take them Fannie Mae. Fannie Mae will take whatever the actual payment is. And if they're on an income-based repayment plan, they'll take whatever that is. I had a borrower with $330,000 worth of student loans. and their income-based repayment plan was 33 bucks, and they used $33. Freddie Mac won't do that. And FHA, as you said, is 1%. So the federal government took over student loans. They federalized student loans, and they haven't done justice to a situation that is disparate as well. Once you have 86% of Black students have student loans, compared to 59% of white students. And the average Black student loan amount is $38,000. The average white student loan is $30,000. And we know in our city, in our state, I see hundreds, depending on what their occupation or their what they were going to school for. We see quite a bit more than 38,000. So there's a disparity based on income and wealth and who has to have student loans. And then there's a disparity built into the housing finance system on how we calculate it. It used to be, and it should go back to this, that if you had a 2-year deferment, we didn't have to count it at all. Now they don't give 2-year deferments, they only give 1 year at a time so that they can't meet that guideline. So yes, the student loan issue is a problem for a large percentage of the borrowers, especially first-time buyers. But also older folks that went back to be retrained carry a lot of student loans. So it's not just young people. It's a big problem. It needs to be addressed. I've been working with the Center for Responsible Lending and the National Fair Housing Alliance. We actually have a committee and have spoken together in Congress with regard to this particular issue of student loans and the more restrictive finance policy rules for
we lost your sound.
Oh, I'm sorry. We're working to address the more restrictive rules in assessing the debt to income calculation for those student loans in all Fannie, Freddie, and FHA. But just in case you did not know, and your lenders don't know, a lot of lenders just don't know, Fannie Mae is the least restrictive. You have a borrower, you're working with her, they have student loans, get them to get on the income-based repayment plan. And then you can use that amount in your qualifying. For Fannie.
And this final question, we can just wrap it up really quick. Someone was asking about how do you feel about the AI appraisals, the artificial intelligence appraisals that are happening? The question is, what are your thoughts on it?
You know, I don't have enough information yet. The automated valuation appraisals. I haven't seen enough of them yet. We don't see too often. Generally, when I'm running DU or LP, desktop underwriter or loan processor, on your purchases, they're requiring a full appraisal with the inside pictures still. On your refinances, we get a lot of appraisal waivers if it's no cash out, where we just don't have to do an appraisal at all. I haven't seen it. The only thing I've gotten AVMs on are reverse mortgages. Those have been ordered on them. They're real conscientious of older people in this COVID-19 environment. I don't have an answer for that yet. I don't know if it will provide equality across the field. I'm skeptical. FICO scoring is supposed to be autonomous, but I've noticed huge disparities in similar credit, almost same credit based on census tract or zip code. From one side of town, this credit is 680, and that on the other side of town, the same credit depth is 785. You know, I think that they're census tract and zip code weighted based on the demographics from that particular area. And I think that automated appraisal valuation modes will probably have some similar weaknesses.
All right, well, thank you so much for that. We, again, greatly appreciate you for being here and being a part. Thank you. Definitely some great information. For those of you all that are interested in the diversity committee, we will be meeting again next week at our normal time at 2:30. please come with any questions, any concerns, anything that you may have. Also, I just want to let you know, I got a comment. All appraisals are not bad. So we're not saying that this happens across the board. This happens everywhere. Just like we have a few bad apples in real estate and things like that. This is not saying that this happens to all appraisals at all. So, but it's out there. Just know that it's out there and just be conscious of that. Other than that, I think that is it. Thank you all. Excuse me for taking this time. Is this going on the website, Mark? Is this one
What I
going on
would
the website?
do, what I would do is email it to you. I'll email you the presentation.
Yes, please.
I'll email it to you. And anybody who wants it, feel free. It's not, I want the message out. I'm not trying to keep it.
And then what we'll do, our CEO, Mark is going to put this video, it'll be on our website for us to go back and take a look at it as well. Because someone did ask about the presentations, Mark Alston, sorry, someone did ask about the presentation. So I will get it to them as well, because we would like that as well. So thank you all. And you all have a wonderful, wonderful day.